Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Markets took a risk-off turn last week as rising trade tensions, hotter than expected inflation data, and a steep drop in consumer sentiment spooked investors. A midweek tariff announcement by the Trump administration derailed early week optimism, while bond markets oscillated as recession fears mounted. Gold continued to shine, but equities lost their footing across most regions. Let's unpack the week. U.S. equities reversed course after early gains, as a surge in inflation and deteriorating consumer confidence sparked renewed anxiety. The Nasdaq's losses pushed its year-to-date decline past 10%, led by tech and communications services. Meanwhile, value stocks outperformed growth for the sixth straight week, underscoring a clear shift in investor preferences amid macro uncertainty. President Trump reignited trade tensions with a surprise announcement of 25% tariffs on all non-US autos, effective April 3rd. Additional reciprocal tariffs may follow this week, keeping markets on edge. Core PCE inflation rose to 2.8% YOY, remaining stubbornly above the Fed's 2% target. Consumer spending barely grew, with inflation-adjusted numbers missing expectations. The University of Michigan index plunged 12% month-over-month to 57.0, with expectations dropping to levels not seen since 2022. Inflation expectations jumped to 5.0%, while two-thirds of respondents now expect unemployment to rise. Q4 GDP was revised slightly higher to 2.4%. The consensus for Q1 is falling below 2%, highlighting a decelerating economy. European equities started strong, but faltered after the US auto tariff announcement. With the EU lacking exemptions and Trump threatening more retaliatory measures, sentiment quickly soured. Meanwhile, UK equities held steady, slightly bucking the broader global decline. The FTSE 100 eked out a 0.1% gain, helped by easing inflation and hopes for a near-term rate cut. But the macro outlook remains mixed. Eurozone PMI data improved for the third straight month, led by services. Germany's IFO index rose again, buoyed by higher infrastructure and defense spending plans. A partial Ukraine-Russia ceasefire focused on the Black Sea added geopolitical stability. Chancellor Reeves Spring Statement confirmed spending cuts. The OBR cut 2025 GDP forecast to 1%. While inflation fell to 2.8%, raising hopes for a May BOE rate cut. Japan's markets slumped as auto exporters came under pressure following the US tariff news. With autos making up one-third of Japan's exports to the US, the stakes are high. PM Shigeru Ishiba warned of a very big impact, and diplomatic efforts are underway to seek exemptions. Meanwhile, the yen weakened past 150 USD, raising imported inflation risks. Governor Ueda reiterated a readiness to raise rates if inflation remains sticky. March Tokyo CPI accelerated to 2.4%, driven by rising food prices. Chinese equities were mostly flat, despite broader global weakness, with limited macro catalysts and earnings in line with expectations. January-February profits fell 0.3%, YOY, missing forecasts and underscoring the urgency to boost domestic demand. At the Boao Forum, senior officials stressed a strategic goal to lift consumption to 70% of GDP by 2035. That effort will be central to hitting China's 5% growth target. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.